A fiscal year is a 12-month accounting period that a business uses for financial and tax reporting purposes. A fiscal year is also known as a financial year. A fiscal year can be different to a calendar year. It doesn't need to start on January 1st and end on December 31st. The dates of a fiscal year are determined by a business's activities. A retail business may have its busiest period during the holiday season, which clashes with calendar year-end reporting, so it chooses other dates. Revenue cycle. A seasonal business like tourism or agriculture may choose a fiscal year that aligns better with its revenue and expenses. Tax reporting requirements. The government specifies these dates. Fiscal years are named using the year when the period ends. For instance, a fiscal year that runs from April 1, 2023 to March 31, 2024 is called FY24. The tax year is an example of a fiscal year. Fiscal year, FI, in finance and government, an annual accounting period for which an institution's financial statements are prepared. Different countries and companies use different fiscal years, often referred to in financial records with the acronym FI, and the fiscal year need not align with the calendar year. While countries generally have a default fiscal year used by the government, they often allow individuals and organizations to employ different fiscal years based on their specific needs. Although a fiscal year need not start at the beginning of the calendar year, it must be a year-long period. In most cases, this means a period of 12 months beginning, for example, on July 1st of one calendar year and running to June 30th of the next calendar year. However, a fiscal year can also be measured in whole weeks, such that it is either 52 or 53 weeks long. In that case, a day of the week is chosen, and the last occurrence of that day before a particular date, such as the end of a month, defines the fiscal year. For example, a fiscal year may end on the last Saturday in September, as represented in each of the successive fiscal year periods listed below. FY 2024, October 1, 2023 to September 28, 2024, 52 weeks, or 364 days. FY 2025, September 29, 2024 to September 27, 2025, 52 weeks, or 364 days. FY 2026, September 28, 2025 to September 26, 2026, 52 weeks, or 364 days. FY 2027, September 27, 2026 to September 25, 2027, 52 weeks, or 364 days. FY 2028, September 26, 2027 to September 30, 2028, 53 weeks, or 371 days. FY 2029, October 1, 2028 to September 29, 2029, 52 weeks, or 364 days. Generally, the choice of fiscal year reflects the relevant institution's specific needs. For example, universities and other agencies or organizations related to education often choose a fiscal year that begins in the summer, thus allowing the fiscal year to align with the local school year. For businesses, the choice between a 12-month and a 52 to 53-week fiscal year will be based on the relevant revenue cycle. For many businesses, using a 12-month fiscal year facilitates year-to-year data comparisons, as each year will have the same number of days. However, some businesses have strong weekly revenue patterns, and so it is more important to them to begin and end accounting periods on the same day of the week. For example, a movie theater that does most of its business on Saturdays and Sundays may choose a 52 to 53-week fiscal year to ensure that most periods have the same number of weekend days and can be more easily compared. The fiscal year is often divided into months and quarters. Month often refers to particular calendar months, though 52 to 53-week fiscal years commonly use 13 to 14 4-week accounting periods, termed months, which need not align with calendar months. The fiscal quarters are usually January 1 to March 31, April 1st to June 30th, July 1st to September 30th, and October 1st to December 31st. Quarters are often referred to with the abbreviations Q1, Q2, and so on. However, the particular quarter referred to as Q1 depends upon the type of fiscal year being used. In roughly 2/3 of all countries, the government's fiscal year is the calendar year. Most other countries begin their year at a different calendar quarter, e.g., April 1st through March 31st, July 1st through June 30th, or October 1st through September 30th. In the United States, the government's fiscal year begins on October 1st, meaning that Q1 in the government's fiscal year is October 1st to December 31st, Q2 is January 1st to March 31st, and so on. A few countries choose other dates for their fiscal years. In Iran, for example, the fiscal year is set according to the Hijri calendar, often called the Islamic calendar. Consequently, the start of the Iranian fiscal year, which usually begins on March 21st, does not correspond to the beginning of any month in the Gregorian calendar, which is used in much of the rest of the world. Great Britain's unusual tax year also stems from a different calendar. Until the mid-18th century, the country used the Julian calendar, with the new year beginning on March 25th, the date of the Christian feast of the Annunciation, the celebration of the announcement by the angel Gabriel to the Virgin Mary that she would conceive a son by the power of the Holy Spirit to be called Jesus, also known as Lady Day. When the country adopted the Gregorian calendar in 1752 to better align itself with other countries in Europe, there was a mismatch between the calendars of about 11 days. Great Britain consequently extended its 1752 tax year by 11 days, to end on April 4, to ensure that no revenue was lost as a result of the shortened calendar year. The 1753 tax year thus began on April 5. In 1800 the start of the tax year was moved forward one more day, to April 6. However, though April 6 remains the start of the tax year for individuals, the British government and British corporations operate on a tax and fiscal year beginning slightly earlier, on April 1. The fiscal year may or may not be equivalent to a country's tax year. For example, in the United States, though the fiscal year begins in October, the tax year is usually the calendar year for individuals. However, businesses often choose to pay taxes according to their fiscal years. This is allowed, provided that the fiscal year is a consecutive 12-month or 52 to 53-week period other than the calendar year. It is possible for businesses to change their fiscal years, but any gaps that result must be recorded and filed as a short tax year. A fiscal year, also known as a financial year, or sometimes budget year, is used in government accounting, which varies between countries, and for budget purposes. It is also used for financial reporting by businesses and other organizations. Laws in many jurisdictions require company financial reports to be prepared and published on an annual basis, but generally with the reporting period not aligning with the calendar year, January 1 to December 31. Taxation laws generally require accounting records to be maintained and taxes calculated on an annual basis, which usually corresponds to the fiscal year used for government purposes. The calculation of tax on an annual basis is especially relevant for direct taxes, such as income tax. Many annual government fees such as council tax and license fees are also levied on a fiscal year basis, but others are charged on an anniversary basis. Some companies, such as Cisco Systems, end their fiscal year on the same day of the week each year, the day that is closest to a particular date, for example, the Friday closest to December 31. Under such a system, some fiscal years have 52 weeks and others 53 weeks. The calendar year is used as the fiscal year by about 65% of publicly traded companies in the United States and for most large corporations in the United Kingdom. That is the case in many countries around the world with a few exceptions such as Australia, New Zealand, and Japan. Many universities have a fiscal year which ends during the summer to align the fiscal year with the academic year, and, in some cases involving public universities, with the state government's fiscal year, and also because the university is normally less busy during the summer months. In the Northern Hemisphere, that is July to the next June. In the Southern Hemisphere, that is the calendar year, January to December. In a similar fashion, many non-profit performing arts organizations will have a fiscal year which ends during the summer, so that their performance season that begins in the fall and ends in the spring will be within one fiscal year. Some media/communication-based organizations use a broadcast calendar as the basis for their fiscal year. Fiscal years' names are often shortened based on the year in which they end. For example, fiscal year 2023 to 2024 and FY24 are synonymous. The fiscal year for individuals and entities to report and pay income taxes is often known as the taxpayer's tax year or taxable year. Taxpayers in many jurisdictions may choose their tax year. Some federal countries, such as Canada and Switzerland, require the provincial or cantonal tax year to align with the federal year. In the United States, most states retained a June 30 fiscal year end date when the federal government switched to September 30 in 1976. Nearly all jurisdictions require that the tax year be 12 months or 52 53rd weeks. However, short years are permitted as the first year or when changing tax years. Most countries require all individuals to pay income tax based on the calendar year. Significant exceptions include Australia. Individuals pay income tax based on the financial year of July 1 until June 30. United Kingdom, the tax year for individuals begins on April 6. This is due to Britain historically having a calendar year starting on Lady Day, March 25, in the Julian calendar but a fiscal year ending on that day. When the UK adopted the Gregorian calendar in 1752, March 25 translated to April 5 and March 26 to April 6. See History of Taxation in the United Kingdom #start of tax year for more detailed explanation. United States, individuals may, but rarely do, elect any tax year, subject to IRS approval. Many jurisdictions require that the tax year conform to the taxpayer's fiscal year for financial reporting. The United States is a notable exception. Taxpayers may choose any tax year, but must keep books and records for such year. Operation by jurisdiction. In some jurisdictions, particularly those that permit tax consolidation, companies that are part of a group of businesses must use nearly the same fiscal year. Differences of up to 3 months are permitted in some jurisdictions, such as the US and Japan, with consolidating entries to adjust for transactions between units with different fiscal years, so the same resources will not be counted more than once or not at all. The tax year for a business is governed by the fiscal year it chooses. A business may choose any consistent fiscal year that it wants. However, for seasonal businesses such as farming and retail, a good accounting practice is to end the fiscal year shortly after the highest revenue time of year. Consequently, most large agriculture companies end their fiscal years after the harvest season, and most retailers end their fiscal years shortly after the Christmas shopping season. Drake notes, however, that there are cases where businesses choose a year end which fits with the slower part of their business year. At this point in the year they are likely to hold less inventory than their average daily inventory over the whole year. Thank you for watching this video.